All right, good morning. It is Monday, March the 4th, 2024. We hope you had a nice weekend. Another nice weekend here for the most part in Charleston. Saturday was a little bit rainy. My daughter started her soccer season. Yours truly is once again the head coach. So we'll be receiving some updates throughout the season, I'm sure, on these videos. My 3-year-old son also started soccer, which is really fun and hilarious. And those of you that know my boy well, it's nice that he's in a sport where he can take out some of that aggression in a socially accepted manner. So really excited for his soccer season to start. We hope you had a nice weekend. Last week, of course, was first week of spring reviews, which is, again, our favorite times of year. Seeing many of you and kind of learning about trips and how your families are doing, and so really nice first week. Last week, looking forward to another busy week. This week, of course, tax forms. All right, so we had talked about this as well. TD Ameritrade finally released that final wave of 1099s on February 29th. All right, so they really used that leap year. So those should be good. I know Schwab also issued some corrected 1099s. Really, it's usually best in terms of like your personal taxes. Like, yeah, I always think it's best, just. And I know people are eager to get it done, but like, I think just waiting till the middle of March, right? And that way it gives a chance. If you're going to get it corrected 1099, it's usually done by then. And truthfully, not all, but most of the CPAs, accountants we work with, like, they're so busy with corporate, right? Because the corporate tax deadline is March 15th here coming up. And then of course you have another month for the initial personal tax deadlines. So, but most accountants are really busy working on companies right now, and then most of them would be fine if you just waited to give them, or even if you give them all your stuff, but just be on the lookout for corrected 1099s, because you don't want to have to go and amend something later on if something changes meaningfully. So markets last week, mostly higher. Again, earnings have been encouraging, almost surprising, right? So I read a report with 90% of the reports in this quarter, earnings have grown at 7.5%, which, looking back, say a year, I think most economists and analysts were expecting such pressure on earnings, whether through just margin compression with the higher cost of goods with inflation, or in terms of revenue decelerating with potentially the consumer slowing down in their spending, and it hasn't happened, right? And so when you see people concerned about, well, valuations are getting stretched, well, not if earnings keep up, right? So not if earnings keep up. I think that's encouraging, particularly in the face of higher interest rates, right? And of course, this can all turn on a dime next quarter, next year, but this is what makes markets fun and really hard to predict each day, each quarter, each year. There's just so many moving parts, right? And now the Fed has that bolt in their back pocket, like, should the economy start to slow, the consumer slow, like, now they can start cutting rates too. So it's what makes markets so difficult to time, and people get in trouble, right? When you try to think you're smarter than the market. So we'll see. This week we get lots of employment data. All right, so of course always initial claims. We also get the February employment picture. So we'll see. But we hope you have a wonderful week. Questions, comments, concerns, please let us know, and we'll talk to you soon. Thanks.